Welcome back to Investing 4.0, Visionary Investing in Future Trends. Today we'll have a close look on Tencent, as you can see here. But before we start, I have to mention two things quickly. So first of all, as usual, this is no investing advice and only reflects my personal opinion, so please always do your own research. And secondly, I currently own 53 shares of Tencent, so I might be biased towards this company, but I'll obviously try to share my point of view as neutral as possible. But now let's jump right in. So Tencent was founded in 1998 by Ma Huateng, who's currently the wealthiest businessman in China. Opposing to Elon Musk or Jack Ma, as you might know from Alibaba, the founder of Alibaba, he's more in the background and doesn't like the big stages. He's a software engineer who saw the opportunities of the internet at a very, very early stage. Now, just 3 years after Tencent was founded, it was getting its first profits, mostly by using mobile value-added services like emojis or other things you could actually buy on their main app, but more on that later. The money in the early stages, interestingly, came from Naspers, a South African media company that bought 46% of Tencent and currently has an ownership of a little bit more than 30% today. Now, then in 2004, Tencent had its initial public offering and started to license games that were promoted on their platforms. Finally, in 2011, WeChat, or the Chinese, in Chinese it's called Weixin, was launched. It started as basically like a copy of WhatsApp or a kind of messaging app, but soon developed to become an all-in-one app solution. So some even say that it's closer to a kind of operating system because of its many applications. Tencent also started to invest in gaming in 2011 and acquired or invested into companies like Riot Games, which produce League of Legends, Epic Games, which nowadays produce Fortnite, and also Activision Blizzard. Then in 2013, they introduced WeChat Pay and the Tencent Cloud and extended their partnership and investments with companies like JD.com or Meituan. So WeChat Pay is extremely successful and actually managed to basically skip the whole credit card age in China, as you can use your phone to pay basically anything. Even small business owners do have WeChat and WeChat Pay on their phones, so you can go to a little store and just buy a Snickers or whatever and pay with WeChat Pay. Since 2015, Tencent is heavily investing into other tech companies like Tesla, China Music, Snapchat, Wells Fargo, Carrefour, and many, many more. So basically, if you invest into Tencent now, you really buy like 700 plus different companies. It almost feels like an ETF to me now. So this makes it a bit tricky to really identify a Tencent's core business model, but I'll give my best to break it down for you in a second. Now, if we take a look at Tencent in 2020, actually it's one of the 10 most valued companies or most valuable companies in the world. It is fast growing and active in countless industries and is working towards making China become the world champion in digitalization. So after understanding a little bit more about the history, let's try to get a better understanding of their business model by taking a look at the social media industry first. Currently, Chinese users spend about 43% of their online time by using Tencent's product, which is mainly WeChat and QQ. The second largest is ByteDance with their app like TikTok, as you probably know. Then Alibaba has an 11% share, and Baidu only 7%, and then 5% is on Kuaishou. Now, it is hard to say which of their businesses makes the most money specifically, as most of their products are kind of integrated or connected into WeChat. So let's instead have a look at their three main sources of revenue. The first one is actually entertainment and gaming. Now, mobile gaming market and also like video on demand platforms are booming, and the corona pandemic actually boosted this further. So Tencent has various video and streaming platforms, is licensing and developing now its own games. They started with licensing and now are developing their own games and have different news channels. If you want to have some kind of fun in China, you will most likely use a product from Tencent. The second is their social media platforms. And I already mentioned that. I'm not really sure if that is the right expression for it, quite frankly, but let's stick with it for now. The product from Tencent that plays a key role is WeChat. Now, WeChat, as already mentioned, is a combination of Facebook, an app store, an online bank or PayPal, WhatsApp, Tinder, Amazon, Uber, Booking.com, and everything else combined. So you can actually access everything you need to do in your daily life by using WeChat. Now, during the time I lived in China for about one and a half years. I've never met anyone not using WeChat, and that was back in 2010. Even in a small business, as mentioned, you can use WeChat to pay your purchase. Now, The Economist got it right to the point when they said WeChat is at every point of your daily contact with the world from morning until night. If you don't use WeChat in China, you're basically a ghost. Now, WeChat is currently used by 1.2 billion people and currently generates about 50% of the total revenue of Tencent. Now, compared to that, we got QQ, and QQ is basically the Chinese pendant to Twitter and has about 860 million accounts. Now, this one is not as, you can see the numbers is pretty high still, 860 million. But a lot of Chinese friends that I have and had at that time mentioned to me that the QQ is not really the thing anymore. They had about more than 900 million users, I think 940 million users at one point, but lost some because they really increased ads and the overall design of the app didn't really feel really well. Now, these two platforms allow Tencent to generate a complete data set basically about every person in China, and that puts them in a very strong position. Here, basically, if you live in the Western world and in Europe or America, all those data sets, which we are actually going to talk about, is the business model of, for example, Facebook, personalized ads and everything. Everybody knows that. You basically have to get information from, let's say, Facebook, from Google or whatever it is, or Alphabet, basically. But there, everything is controlled by Tencent, to a big part. Now, what is important is that if we are comparing WeChat and Facebook, for example, Facebook is generating most of their profits with ads. And Tencent, however, makes most of their money from online games, subscriptions, or as mentioned before, the mobile value-added services like emojis and so on. Now, the third big source of revenue, as we already noticed in the history part, is their investments. To simplify it, Tencent has 3 different types of investment, and within these investment types, about 30 to 40% are going into companies outside of China, which I think is pretty interesting. Now, the first strategy is strategic investments. These are investments into companies like JD.com or other e-commerce businesses, as you can buy a lot of goods on WeChat, and it makes totally sense to connect them with like the e-commerce business to benefit from this partnership. Now, the second type is the profitable investments. This is similar to what Warren Buffett is doing, or other investment companies or banks are doing, or what you and me are doing when investing like privately into companies. Tencent is investing to benefit and gain profits. For example, they're invested in Tesla and Snapchat and many more. Now, the third one is an interesting one, and I called it competitive, but probably there's a lot of different synergies from the first 2 categories here as well. Now, Tencent wants to be part of any new upcoming trends and therefore not allow any competition to rise. That means they also invest a lot of venture capital into upcoming unicorns. And currently they are the second biggest company investing into unicorns with about 46 total investments into unicorns. And yeah, as I mentioned, that's basically combining all of their strategies and putting them on rank 2, as I mentioned, in the highest investments in unicorns. And examples for this are Douyu, which is the Chinese equivalent to Twitch. Twitter was the QQ, it's Twitch. And as I just mentioned, for example, Snapchat can be a profitable investment, but also is some kind of a competitor, as we probably understand. So therefore, Tencent actually allows you to invest into smaller startups that are not publicly listed yet, which is a big benefit if you ask me. At the same time, this is extremely hard to consider when you want to make a proper evaluation of this company. And as you know, it only takes about 1 or 2 companies in your portfolio that really have to take off. And yeah, that will actually change, in this case, the balance sheet of Tencent significantly. I could probably talk a few hours only about their business model, but as I don't want to make this video too long, this is my summary of their business model. Now, Tencent is a big tech company that has a strong monopoly in China. The gaming industry in general is booming, as well as other digital services, and this strengthens Tencent's position in my opinion. They managed to establish themselves as point of contact for anything that you want to basically do in China. If it's just watching a video, playing a game, paying or sending money, or listening to music. Their business model is not hard to understand, as everyone knows, and that's actually quite good for us. So you know how apps works, so yeah, really that's a plus. Of course, other competitors can easily enter the market, but I think it really takes a really innovative or groundbreaking approach to steal market share from Tencent. And even then, users will not switch completely from Tencent products away, but just use another app additionally, like TikTok for example. For me, it'll be interesting if TikTok, for example, can actually extend its shares in China and eventually really also become profitable. Or maybe Tencent just buys them, who knows, I don't know. The combination of this dominance with the investments that they're doing into other startups or unicorns, as well as strategic investments, makes me feel very confident about their business model and their basically long-term success. If you watched this far, I'd really appreciate if you would take a second to smash that like button and subscribe to my channel, as this is the only way for me to see if you actually like my work and get some appreciation back. But now, after understanding their business model, so basically social media and apps and pay and basically everything that's around digital services as well as investments, let's take a look at the numbers. As I mentioned, Tencent is a fast-growing company that has various sources of revenue. So this is really not easy to evaluate. So looking at the share price, it currently moves around $73, which is a year-to-date plus of about 67%, which is pretty good in my opinion. The PE ratio is at 52, which is slightly higher than the historic value of 40. So you could say that it's a little bit overpriced right now, but in my opinion, the PE ratio might not really be the best indicator to look at companies that are really fast growing. The revenue growth was about 38% per year and the EBIT growth about 29% per year since 2010. And they currently distribute only about 0.2% of their dividends per year. In order to properly evaluate Tencent, I'm using 2 different methods. Now, the first one is the categories after Peter Lynch. And Peter Lynch is the stock market guru. You should really read his book, One Up on Wall Street. And yeah, he's basically categorizing companies into cyclical and non-cyclical companies. And for the non-cyclical companies, which Tencent is in this case, he has 3 different types: the slow growers, the average grower, and the fast grower. Fast growers have the 3 following features. They have a profit growth of more than 10%, high investing into growth in general, and have a very low dividend. Now, as we just saw, Tencent definitely falls under the category fast grower, which leads to the following strategy in general. Buy it as long as the growth remains. Use the compound effect to really benefit from their investments and observe closely if the growth flattens or decreases significantly. So that's a risk, but more on that later. The second method is the good old discounted cash flow model. So let's switch to my screen for a second and take a look at that. All right, we do have the revenue growth, the operating margin, the EBIT, and the overall result after tax for the last 5 to 6 years. Based on this, we'll make predictions for the future cash flow, and I'm using a discounting factor of 7%. Now we are predicting the revenue growth and the operating margin for the next 20 years. I'm using a conservative approach, so if the company evaluation is still okay using this approach, it might be even better if the numbers are stronger than expected. I'm assuming a revenue growth of 22% and then 20%, which then slows down to 15% and 10% for the following years due to the increased size. At the same time, the operating margin should actually increase as we really benefit from the previous investments and also general increases in efficiency. So for the next 20 years, I expect a general growth of the operating margin from 25 to 35% in, again, 20 years. So based on this model with, in my opinion, conservative calculations, Tencent fair value should be around $85 today, which is a plus of 16%. Now, if the numbers look better in the future, the potential increases significantly. Now, if we assume that the revenue growth will continue with 15% for the last 10 years here, the current fair value would actually be about $104 or a plus of 43%. So do your own assumptions and play around a little bit. You can download any kind of DCF model in Excel anywhere, just Google it. Yeah, that's basically based on your own predictions, but I took, in my opinion, a conservative approach, and the numbers still look good. Now, last but not least, let's take a look at the risks. And I currently see three main risks. The first one is competition. Now, everyone basically can enter the market, as we currently see with TikTok. I mentioned earlier that usually different apps don't steal market share unless they're replacing the app of the established companies. Otherwise, for example, Facebook would really lose market share year over year because we see TikTok and other apps rising. So apps like WeChat or QQ will still be used in the future, especially since they combine a very big variety of different applications, and I do assess the risk as medium. Now, the second one is the evaluation risk. I already mentioned that it's hard to evaluate fast-growing companies, and as I mentioned also, it's a fast grower according to Peter Lynch. Now, if the growth actually decreases significantly, the share price might also significantly drop by say 40 to 70%. And I do evaluate this risk as medium as well. We simply don't know what the future will hold and if other new apps or technologies or whatever it is will manage to diminish the dominant position from WeChat and Tencent overall. The third risk is the political or economic risk here. And of course, as any Chinese company, Tencent is cooperating with the Chinese government. I believe that the power of Tencent is actually pretty big and that they have a big lever. I see the risk of any conflict fairly low with the government, as they are controlling all the data that the government actually needs or wants. It is also interesting to observe how the stock reacts to impacts on the economy. If you look at the 5-year chart, you barely notice the impact of the corona pandemic. And let me say one thing, not a lot of companies got such a low impact like this. Now, why is that? Probably because of the digital services that they offer and that their business model continued, and that China also got over the pandemic in March already, so the impact was fairly low. As a summary though, I'd say that the political and economical risk is fairly low as well. I believe that Tencent is worth a buy. I currently own 53 shares, as I mentioned in the beginning, so I might be a little bit biased, but I really think that it's a great company, and the investments that they take into all those different kind of industries will pay out in the future. So yeah, I will probably extend my position if we see some smaller discounts, and I'll buy over time and see what happens with Tencent. So what do you think about Tencent? Do you already own some shares, or do you think about investing into Tencent? Let me know down in the comments below. I hope you liked my analysis of Tencent. These videos and the research actually takes a lot of time. So I would really appreciate the 1 second that it takes you to hit that like button. And if you want to see more videos like this, also please subscribe to my channel. Now that's it from my side. For now, I'm out.